A new study out from Nuveen finds that high net worth investors who are investing in ESG, impact funds, responsible investment vehicles, are doing so now more than ever before because they see it as having good returns. 53% in this survey, that was the primary reason for that decision. Megan Fielding is Nuveen's Senior Director of Responsible Investing. She's joining us from San Francisco. Megan, thank you for joining us. So it's interesting, this perception shift. Before we dig into that, though, I am curious, as we have seen the market volatility over the last 6 months amidst this pandemic, have we seen more investment dollars go into responsible investment vehicles? What's been the status?
Well, thank you so much for having us today. We really appreciate the opportunity to talk about what's going on. And certainly the data that we've shared with you through the survey was conducted pre-COVID-19. And so anecdotally, what we have is certainly strong evidence that suggests more and more investors are very interested in coming into ESG. And two things in particular. One, the motivations are even greater across a greater audience in terms of, I would say, the focus on the S within ESG, S standing for social, E and G standing for environmental and governance. And then secondarily, the data on performance is very, very strong, both on a short-term perspective this year, indicating ESG funds outperforming non-ESG funds, and then some long-term data that has recently been released by Morningstar earlier this week.
Hey, Megan, can you put that into perspective for us, though? When Nuveen, against what? Give us the context of what that looks like.
I'm sorry, you broke up. Can you repeat the question?
Sure. So Nuveen writes in the study that investors say better investment performance is their motivation for participating in responsible investing. You just referenced this. So what does that look like, though? Better performance as a metric against what?
Yeah, better performance than non-ESG funds. So investors have certainly an array of investments that they can pursue, and some are earmarked ESG focused funds or sustainable finance funds. And evidence suggests that those funds are outperforming the non-ESG or the non-sustainable.
Is there a percent number you can throw at us as to what qualifies as better?
It really depends on the proof point. This year we've seen, outperformance anywhere from several hundred basis points to a few percentage points. To less, of course. But I would reference, some studies by Morningstar, which certainly is publicly available.
Megan, I'm wondering, you highlight the S in the ESG, and given the conversations we've had over the last several weeks about race and inequality and this renewed attention on how corporate America is setting these goals, I'm wondering if that definition has changed. I mean, often we talk about ESG and there's a lot of tech companies that are included in that portfolio. But what we've learned over the last few weeks is that these companies that were, at least publicly about diversity haven't really moved the needle on things like that. So do you think there's a shift in the conversation of how we should view that part of ESG?
I think there's an expansion in the conversation that's unfolding at this time. I mean, and if you look back historically, these types of conversations have been taking place based on current events, based on social discourse in the marketplace, in society as a whole. They've really been going back, if you think back, to the 70s and 80s, starting with, concerns around businesses doing transactions in South Africa with the apartheid focus at that point. So investors have always been, I think, raising the consciousness of both their asset managers as well as the companies in which they invest or potentially could invest. So again, as asset managers, we have dialogues with our companies, our portfolio companies, with their managements, and what is taking place now expands upon that conversation. So certainly the issue of diversity and inclusion and gender board diversity have been very, strong areas of focus for firms like ourselves, and we've seen good movement in terms of not only the discussions taking place, but the actual shifts within those companies, the recognition that they need to be doing something different, and they actually take that action to do that different policy or implement that different policy.
Hey, Megan, Rick Newman here. How do you approach energy companies and oil companies in particular? So oil drillers generally considered environmental villains, but some of them are transitioning over to clean energy. So how do you make the distinction whether you can invest in them or not?
Yeah, so at our firm, a lot of our focus is across sectors. So if we're talking about here in the public markets, for example, equities, we'd be looking at ESG leaders within a sector. So as opposed to, as you said, all energy companies being evil, we're not looking to take everything out of a portfolio, but rather recognizing who is a leader, who is actually recognizing the risk associated with with climate change and having fossil fuels, and who is looking to expand upon alternative energy and investing in that wisely.
Megan, thank you so much. Megan Fielding is Nuveen Senior Director of Responsible Investing, joining us to talk about Nuveen's latest research there on perceptions of responsible investing.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.